What's going on, everybody? Today's trade review is for Tuesday, May 21st. And if you're not familiar, I trade with ICT concepts. I particularly trade the 2022 model. I've been working on that for 6-7 months now. So this is my review with that in mind. I'm just going to go through what I'm looking for, what I do, what I've learned. I'm still learning, but I've been doing really, really well with this. I feel like I've never read the market better. So if you want to learn it, go to ICT's website. I'm sorry, not website, YouTube channel, and it's free. Don't pay anybody. Don't watch anybody else's channel either. That's teaching you, right? I'm not teaching you. I'm just going over my trade review. This is my journey and the way I see it. And hopefully, hopefully it's right. But so far it's been pretty spot on. So this is the 4-hour chart. Basically I'm going to show you, I start top down daily chart. I glance at the 4-hour, the 1 hour, 15 minute, 5 minute, and I execute on the 1 through 5, right? So most of my analysis while I'm trading is coming from the 15 minute and the 5, 15 and 1 hour chart. But then of course I take into account the 4 and daily chart as well. So this is the 4-hour. And as you can see, price jumped up here, left this big gap, this big fair value gap, came back down right into it here, and made its way back up. But what I'm looking at is I immediately, when I glance into this 4-hour chart, look at all these highs right here, right? Look at all these highs. Especially these two, the most current ones. That looks like some buy-side liquidity right there, right? If you know anything about this, but I'm marking that as my buy-side liquidity. I'm expecting price, could go up there. We have a 4-hour gap right here that it created. It created this fair value gap on its way up. Now it's pulled back right down into it. Okay, since it's pulled down right into it, we have these equal highs up here. I'm expecting price to come up through it. Now, you'll see in a second, I'll go to the daily chart. Overall, in the daily chart, I believe price digs back down into this gap again. So we'll see. But for now, we have these equal highs, relatively equal highs, digging into this 4-hour gap, fair value gap. Look, right here's an order block. This could be, that's an order block for the 4-hour chart. Digging into the gap, hitting that order block. We have equal highs up here. Right here, just that part is telling me, hey, we could run up there. Okay, so let me go to where I pull up the daily chart real quick. And this, like I said before, is the replay video of me trading, because I record myself trading every day. All right, let me find, where are you? It's very brief that I went onto that daily chart. Let's see, where are you? No, it was further back here. And I want to show you because I want you to see. There we go. Here's the daily chart. So I want you to see, price was making its way back up. What do you have here to the left? Well, relatively equal highs, right? So you have these relatively equal highs. So as price is coming up, I'm expecting it to take that out. What's next? Well, you have here. I'm expecting price to take that out. So it gaps up through it, has a fair value gap, right? Runs up here, hits the middle, almost the middle of it, the consequent encroachment, right? That's very important. This area hits that, immediately comes back, not immediately, but over the next day, Comes back up, makes a new all-time high. I fully expected that on that day, yesterday. Fully expected it could come up, make a new all-time high. I didn't have an entry that I took. I actually did not take a trade. Made its all-time high, and it just kept going, making new all-time highs. Because that all-time high is current. It was lower, right? So it was here. Came down, and it went through. So now that it did that, it's coming down. You already see it's rebalancing what could have been another fair value gap, and it's pulling back. So overall, I think we come back down into this daily fair value gap. Here's a swing here. I believe we come down here, make some equal lows, maybe come back up again, and then we run through it. We'll see. Still working on that part, getting better at that bias going over multiple days. I'm getting a lot better, but so we'll see. So today, though, so that was that. But today, because that 4-hour chart, I came in with a long bias. With a long bias, okay? So let's see. Let's drop into... So here's the 5-minute chart. I got my London low, London high. We had an opening range gap here. So that's basically... If you don't know what that is, that's the... when the market closes, the New York time, not the futures market, but the actual stock market closes in the afternoon. From that time that it closes until 9:30 the next morning, New York time, when that opens, the price between those two, that's the gap, if there's a gap. Okay, so let me show you. Here. That was the close, New York session on the stock market. This was the open right here, 9:30. So I marked the gap, the opening range gap. Okay. Mark that, and I marked the middle. The middle is very important to me. So I marked that. We have... Okay, so I'm going to show you something here too, but let me go back a little more. Here's the 1-hour chart. So again, going from top down, I noticed that on the 4-hour. I already was looking at the daily. Now here's the 1-hour chart. Let's look. Okay, well, we have... These two are pretty... I mean... We have some relatively equal highs here. Dug down into that 4-hour chart gap that I mentioned, the 4-hour fair value gap. Fair value gap. What do we have right here? A bullish order block. Look where price dug right into that bullish order block, because it came down below these lows and then it displaced up, leaving a fair value gap. Okay, so price came down into here, into this 4-hour gap. Fair value gaps, everything's telling me price is going to run through these highs up here. So now the market opens. I'm waiting for the open. I'm waiting until we have our draw on liquidity, which let's see how far it's going to run. I don't know. See how far down it goes. You know, maybe it digs down deeper, whatever it does. But I'm waiting for the market structure shift, displacement up, leaving a fair value gap, and then take that all the way through these highs up here. So, because of that, I thought it could overshoot this a little bit and maybe even make it up to this one of these wicks before we see the rundown, if it doesn't take a new all-time high. I'm not sure. I'm not great at the all-time highs once it gets there. I know oftentimes I see it when it makes a new all-time high. Oftentimes it keeps running. People like to start shorting. Oh, I can't go higher. And then they just keep getting beat up. I see that all the time. I've had that happen. So anyways, let's go back here. Okay, there's the 4-hour. So now we're back in the 5-minute. When I drop down into the 5-minute, this is what it looks like. Okay. Got our buy side liquidity. Making this run down. So I'm gonna fast forward it here. I don't think we're at the open quite yet. Yeah, not yet. I'm still drawing up putting my markings. I still put all the markings on here because, like I said, I want to see it on my chart until I'm like really, really good. I'm not like that yet. Where I can have it just completely blank without putting my markings up there. But here's the 8:30 open, right? And market just came down. Market came down. So if I'm expecting a long, what do I want to see happen first? I want to see the market run short. I want to see the market come down. And then I look for my long. Oh, so I marked fair value gap right there because let me back it up on the 2-minute chart. Wait. Back it up. Here we go. 2-minute chart. This is what I wanted to show you. So you could mistake this actually for an entry. And maybe it could be, but on the 2-minute chart here, price is coming down. And like I said, I'm looking for a long. And then you have this swing right here, right? This wick is above the right, above the left. So you have a swing. And right here, price took that swing and left a fair value gap. So you could sit here and say, that's an entry right here to go long. And you could, you need your stop down here. I didn't take that entry. Here's why. Oh, so here's the 15-minute real quick too. Relatively equal highs. Price ran down. Okay. But here's why I didn't take it. Well, price is going into this fair value gap, into this opening range gap. I mean, it could run through, but that's not the real reason. Let's go when it drop. Here we go. Here's the 5-minute chart. So what I wanted to see is on the higher time frame, I wanted to see this 5-minute have a market structure shift. Because if you look, price ran down, little pullback, lower low here, pullback here, lower low. Okay, so where's the swing? Not there, not there, not there. Right here. Left is lower, right is lower. So here's our swing. So really what I want to see is price take this swing. Because also we have the middle of our opening range yet. Because what could happen is price could hit right here and continue short. Everything else lined up for me though to run out buy side liquidity up here. So I had zero fear of that happening, but it could. So I want to see it take this swing first. So it didn't take that swing first. So let's fast forward it a little bit and look what it's happening. It's running out that fair value gap on my 2-minute. Okay, I was just looking at stuff there. So I'm measuring out this range, this leg down. And I want my trade to be in the discount of that, which is below the 50%, below equilibrium. See, and we have this big gap, fair value gap right here as well. This is the 15-minute. The middle of it, consequent encroachment, it's about where we're attacking. So fast forward a little bit. So look, here's that fair value gap. If you were in this trade and took this entry here to go long, what I would be looking at is, yeah, I'd have my stop down here, but I would be thinking to myself, the only chart that we had a fair value gap on was this 2-minute chart. It didn't displace anywhere else and it didn't leave a gap anywhere else. I'm not very comfortable sitting in this. That's what I would be thinking. I don't think it ran out the bottom. Let me see. Let's fast forward. Fast forward. Yeah, it just created these wicks down here. It never actually ran out the bottom. This is the 4-hour chart again. Digging into that gap and hitting this order block. Just about. Very close. So I went ahead and marked that. Left it. Okay, I'm just kind of trying to see if I can see a power of 3. So now, yeah, see, it didn't run out the bottom. So you would have been safe, really, technically, in this fair value gap, but you would have taken a lot of heat. And I'm not even worried about heat, really, to be honest, because I have my money management. I know where my stops are going. I know where my targets are. I'm not worried about the heat. What I'm worried about is when I'm taking heat and now I'm unsure about the trade. Like, crap, maybe this wasn't a good one because I only displaced on one small time frame. I only had one fair value gap on one small time frame, which that could work, but I like all the confirmations of the higher time frames. So now look what happens. Price ran up, took this swing. Now, this is the 1 minute. Took this swing. Now we're displacing. Fast forward a little bit. Now we're displacing. I preferred for it to run up through a little bit through the opening range gap, the middle of it here, and then come back down. But hey, I'm not going to miss the trade. So as soon as this closes, do we have our little fair value gap here? Took this swing. The 2 minute as well was displacing. The 5 minute was displacing. That's what I like to see. Every chart displacing, right? That's what I like to see. Every chart. Not all of them. The 1 minute, 2 minute, I believe 3 minute also had a fair value gap. The 5 minute didn't, which that's okay. But because it still displaced and all the lower time frames had the fair value gap. So here we go. We're running up. Now my entry is going to be right here as soon as it hits the fair value gap. This low or this low. So hold on, let me pause. Your stop could be this bar created the bottom of this fair value gap. Stop could be the bottom of this wick. It could be the bottom of this wick, or it could be all the way at the low, depending on your risk tolerance. Now, if it takes this low, I went out no matter what. So typically, I measure out, I don't want to risk more than about 25 points max. If I have to risk a little more, I will, but not very much more. So that's about the max. But then my profits got to be able to get at least a 1-to-1. I prefer 2-to-1. So let's see this come down here. Fast forward a little bit. I'm getting ready. For some reason, I had two contracts on there because I copy trade to my Rhythmic account. So if I have 2 here with my ratio, then it'll double everything, and I don't want that. All right, here we go. So look at this. Oh, we got close, right? So we got close. I went ahead, hopped in, and this thing popped up for some reason. I didn't know what was going on. Let's see. It said, I don't know, it said something. But I got in the trade. I made sure took my trade, made sure it was copying. I was trying to figure out what's going on. So I'm like, yep, market, I'm in live data. I don't know what's going on. But everything was there. So I was like, all right, cool. Because I wanted to get in down here, which not a big deal. I don't know. What is that? 3 points, 2 points, 3 points, whatever. Not a big deal. 14, I wanted to get in down here. Okay, so, and every time I take my trade with the expectation, price could dig into here. And this is an order block right here, right? This little order block. Because it came down into this volume imbalance and then displaced up with a fair value gap. So here's a little order block. My expectation is price could dig here, could dig into here. I don't want to see it go under this wick. And definitely don't want to see it go under this. That's my expectation. So we sit in this. My target. I'm measuring out. Oh, wait. Let me back up. So now I go ahead and measure this area again from up here before we started to move down. And here's equilibrium. And if you can see, price bounced right off equilibrium. Right here. Right down into here. So my target would be the first. That's what I'm looking for. Where's my target? I got my stop in place. Where's my target? You look for the first, here's what I look for. Equilibrium, the first imbalance or liquidity level after equilibrium, or buy side liquidity. I thought it would get to buy side liquidity, but I still go for the low hanging fruit, in case you don't know, which typically is the equilibrium or the first imbalance after equilibrium. But in this case, that was only 7 points away. So we have these highs, but that's still not, I mean, if it's going to hit these highs, in my opinion, it'll probably hit this London low, but there's still no imbalances here, right? So no imbalances. Then we have the opening. Then if it gets all the way up there, it's probably going to fill the gap. And then I see here this imbalance. So if it fills the gap, it's probably going to hit this imbalance. This fair value gap right here. And then if it hits that, I don't know, chances are it'll run the buy side, but so that would be my target right there. Okay. So I draw out my target, set my target, and look what's happening. Price is pulling back. And this is on my Friday trade review I mentioned, where you can get in here, and if it digs down into where you're expecting that it could go, you could throw on another contract. I personally don't do that. I did that only Friday, just to show you that that's okay. But I don't do that. It's not part of my model here, not part of my entry model. But look where price came down to, right to this order block here. Okay. I look for the middle of the order block for it to not close below the middle of the order block. I fully expect price could go to the middle of order blocks. So it came down to the top of it. Let's fast forward right off the equilibrium. Fast forward it. Fast forward it. Price, I'm waiting. I'm really wanting price to take this high right here. Relatively equal highs on the 1 minute. Price should take it. What I'm really watching though is the middle of the gap. Once price takes these, I'm watching to see if it bounces off this gap. And then what happens after that? That's key. That's very key. So once it takes this high here, price should not come back through the order block anyways. It could come back down here. So fast forward a little bit. Fast forward. Left a little gap right here. Little fair value gap. Mark that. Okay. Making its way up. Its way up. Bam. What did it hit right there? The middle of the opening range gap. Okay. Bounced off of it. I want to see how it reacts. Again, I'm fully expecting price could trade down into this area again. It's okay, but I don't want it to close. It could trade down there. I don't want it to close below it. So that's why I moved my stop up. Money management. Look. After I'm rewinding here. Oh, when did I move it? Moved it along. There we go. So what happens is we took this high. We dug down into this order block. So now what shouldn't happen is price should not trade below the middle of this order block. If it does, it may fail. There's nothing else to stop it. So I move my stop up here. And because there's nothing else really, I mean, it could run out the bottom with these if it does close below this order block. So I move it up right below the halfway point of the order block. And you'll see it gets close, but I'm not worried about it. So price comes up, hits that equilibrium. That opening range gap middle part there, the consequent encroachment. Comes back down in here, digging. A little smiley face to show I am not worried. No worries here. Uh-oh. Boom. Wow, look, it hit the 25% mark of this range that I drew out. To the tick. That's crazy. Now, look where the middle of the order block is. Interesting. Hit the middle of the order block. So I put a little smiley face there. Thank you, middle of the order block. Now I said, here we go now. That's it. Price is not coming back down here. That's it. Now, we get up to the middle of that opening range gap again. Left another little fair value gap, the 1 minute. Okay, making some little equal highs here. Retail is going to think that is resistance. No, we got a lot of liquidity building up here. We're going to blow through that. We're going to blow through that, baby. Now we got this volume imbalance. I'm fully expecting price could come back to here. Marked out that little volume imbalance, extend out the fair value gap. Come back down here one more time. Take out these right here, as you can see. Oh, look at the 5 minute. We've got some buy side liquidity generating, being built up there. So to me, this is suspect. Yep, we're going to blow through this. Now, I'm really confident in this trade at this point. Really confident. It did everything down here it should do to not come back down. It's doing everything up here that it should do to blow through and keep going. Okay. So here we go. Now we're making some we have some little buy side liquidity here. You should take that. I want to see it just, go up with some energy. We have this little, it's not really order block, but I marked this as a down closed candle because I don't want to see price take out down closed candles now. There we go. Bounced off the London low a little bit. Oh, and I did move my target down to the opening gap, high of the opening gap. Just because I had been sitting in this for a little while, and because it took a while, I started getting a little bit, again, I go for the low-hanging fruit. I don't want to, until I keep getting better. I had every belief this is going to come up to here and probably take buy side. So, and it did, in case you don't know. But I went ahead and moved it there to play it safe, and I wanted to see because I'm still studying all these levels and stuff, right? I'm getting months worth of data to tell me what happens if I have everything right, everything drawn out, everything framed out, and it hits the London low. I'm getting data, right? I'm getting a lot of data to tell me, does the London low ever stop it? With these conditions, like I'm tracking a lot of stuff, like in my journal, a lot of stuff. And I'm trying to see. So as you can see, my mouse was kind of hovering over the close button here for a little while. Cause I'm like, if it rejects the London low, I might want to get out. To me though, and this is part of me still learning to trust this and rely on this and just hold if I have my bias and I know. But at the same time, I'm not taking partials. This is where you take partials. Like you could take a partial here, partial here, partial here. I'm not taking partials either because I'm not trading enough contracts. So that's why I kind of start, I tighten up and go to break even once price hits somewhere that I think could be a partial, or maybe take a profit there, or I'll just close it, or I'll move to break even and get ready to close it. I'm still learning. So we hit that, we kind of play around it a little bit. As you can see, I moved to break even, a little bit of profit just in case, but price should not come back down here. And just waiting, and blew through it. You can see. Just hesitated a little bit there. Ended up blowing right through it. Cancel out my little stop there. And then, just put a little note for the ICT haters. Like I said last video, I don't know. But what I do know is this stuff works. Works like magic. Works like magic. So, and I don't understand, Everybody says ICT is a fraud. But it's stuff's on YouTube for free. I'm learning it. it works. So I don't know. That's my trade there. And yep. That was it. So see how the rest of the week goes. I probably won't be trading, or actually I'm not going to trade Wednesday. I have meeting minutes and earnings for NVIDIA. So won't be trading there. Come back Thursday and Friday. See what happens. See if we, for the rest of the day though, let's see. I don't think on this video I got it. Yeah, I made it up there. And then for the rest of the day, like this to me was suspect also when price started coming down. That, oh yeah, this is going to run up. So it did. It ended up running up. I don't think it made a new all-time high. I haven't checked. But let's see if the rest of the week, Thursday, Friday, if we start making our way down like I thought. So, all right. Hope this, somebody get something out of this. I was trying to keep it short. I think I'm about this might be close to 20 minutes. All right. I promise I'm going to start being able to shorten these up to around 10, 15 minutes is my goal. It's just, I start talking a lot, and because I'm excited because I'm still learning, and this stuff to me is just awesome. It's like magic. Anyways, all right. So have a great evening. Have a great rest of your trading week in case if I don't post any other videos. I probably will though. Actually, I know I will because a lot of people has been asking me how do I copy Rhythmic accounts from TradingView. That's coming. All right. Talk to y'all later and trade well, everybody.
Yeah.